Apple, China, planning to expand its ban on iPhones, prohibiting certain government-backed agencies and state companies from using the devices. Ed Ludlow has more. Morning, Ed.
Good morning, Jonathan. Apple is down more than 4%. As you can see, that equates to $122 billion of market cap shed. I should say it's on track for its biggest drop in a month. What we are reporting at Bloomberg is an extension of what the Wall Street Journal reported 24 hours ago. They had said, citing anonymous sources, that some central government agencies had told staff that to leave their iPhones at home and other foreign handsets. Our understanding from Bloomberg sources is that there is a consideration this is extended to a broader range of government agencies, but also state-backed enterprises as well. You will remember, Jonathan, you and I 24 hours ago talked about the May edict from the Chinese government for personal computers. In May of 2022, the Chinese government made a very similar decree that a wide range of government agencies and state-backed corporations had to, within a term limit, switch from foreign brand PCs to domestic brand PCs. This is really critically important. Stock's now down 4.8%. Go back to the earnings call on August 3rd. What they had told us is that in China, it was a June quarter record for sales. In the June quarter in China, Apple had swung to revenue growth of 8% from a decline of 3% the prior quarter. But the language was so specific. From Luca Maestri, the CFO, it was that they'd see continued growth in the Greater China region. And Tim Cook said the biggest driver of growth in that market in Greater China was switchers, people that were switching to iPhone for the first time. Remember, guidance for the current period is that sales will be in line with the past quarter. In other words, a small decline. 4 straight quarters of declines would be the longest streak going back 2 decades. So my point here is that based on that narrative from the earnings call, if there's a serious government action in China on the iPhone, that muddies significantly the guidance that we were given on the call, because China was the bright spot.
The stock is down by close to 5%, worst day potentially going back to May of this year. This is the bullish outlook on things, Ed, and I'll share more of the quote from Dan Ives of Wedbush in just a moment. But he says this morning: the recent China news over the last few days we believe is a worst-case scenario. Any China government agency iPhone ban is way overblown, as to quantify it's less than 500,000 iPhones of roughly 45 million we expect to be sold in China over the next 12 months. And I just wonder, though, the optics they're signaling for domestic China, for the people of that country. You put it together with Huawei and the story of the last week. Just how much pressure is there on this company going into that unveiling a week away?
Gosh, this is tough, John. But when Huawei came out with the Mate 60 Pro, before you even get to the question of sanctions, the logic in the market was that it would be the champion domestic player. You saw names like Xiaomi fall because they saw Huawei, which has been out of the smartphone market for some time, as a new threat to the domestic players. I guess you extend that logic to Apple, and if the Chinese government is cracking down on iPhone, which is their biggest market outside of America, right, is the Greater China region, is Huawei a threat to Apple? The thing that's muddying this is the geopolitics. I think AMH is probably better on this one, but we are seeing a tit for tat, aren't we, in the last 2 days? The timing of Mate 60 Pro with Raimondo's visit to China, and now the news flow about Chinese response on clamping down on foreign handset makers. I just want to make that point really clear, Jonathan. What we're reporting is principally this is impacting iPhone, but it applies to other non-Chinese handset makers as well.
Got it. A point well made. Ed, thank you. All of this going into the G20 later this weekend. That stock is down by a little more than 4%. The broader market pulling back by 0.64 on the S&P. The iPhone ban that we're talking about specifically also weighing on Apple's supply chain. Micron, Qualcomm, Skyworks, all under pressure at the opening bell. Abby has more. Hey, Abby.
Hey, John. And this is really a numbers game, because these, of course, are the chip companies that make the chips that go into the iPhones. So you can see how it would be a distress for some of these companies, especially those that gain more revenue from Apple. So there's a great function in the Bloomberg terminal, SPLC. It's the supply chain function. You get to see the supply chains on both sides of a given company. So for Skyworks, 58% of their revenues comes from Apple. Qualcomm, 23%. Micron, 6%. And then Cirrus Logic, 83%. Now, this then becomes a question of the move on the year in terms of what could be ahead for these stocks and valuation. Now, most of these names, they're actually trading at a double-digit discount to the group on valuation. Micron's the exception there. On the year, both Cirrus Logic and Qualcomm up just nominally, and after today, they're actually a little bit down on the year. So you could say it's priced in. Micron up 50% on the year, well, after today, not up quite as much, but a big premium. Again, not a lot of revenue exposure there. Valuation strong, but Skyworks, Sean, this is the one that on the day is hit the worst day going back to October of last year. 17% higher on the year, 58% of their revenue. When you put that together, it's not really priced in yet. You could continue to see Skyworks be under significant pressure.